Hi everyone, I'm Lauren Moffitt, Asia Biofuels Net Zero Senior Market Reporter.
And I'm Ryan Ang, Asia Biofuels and Net Zero Graduate Trainee. Today we'll be summarizing key Asian biofuels and feedstocks market movements that have happened during October. First, we can see here that the palm oil gas oil or POGO spread hit an August record low of negative $267.50 per tonne on 7 October following the OPEC Plus decision to cut crude oil production, which boosted crude and product prices, widening the spread between palm oil and gas oil. The rise in Bursa Malaysia crude palm oil or CPO futures over the month was not enough to offset this increase in gas oil prices, even though the active third-month contract exceeded the 4,000 ringgit per tonne threshold for the first time since August. The recent increase in CPO futures was due to palm oil restocking from China and India after the Indonesian government reduced export duties and extended an export levy waiver on palm oil products. Consumer countries were also taking advantage of a depreciating ringgit and unprecedented wide palm oil soybean oil spread of over $460 per tonne at the end of October. The resulting record low POGO spread has driven an increase in palm metal ester or PME demand for discretionary or unmandated blending in China. Palm oil meal effluents or POME prices have also followed the rise in Bursa Malaysia CPO futures by rebounding almost $50 per tonne from a 3-month low of $750 per tonne on 11 October. But gains have been kept by weak European and Chinese POME demand with low buying interest for finished biodiesel, especially POME metal ester in the European winter. Chinese UCO prices remained largely flat throughout October despite dwindling European demand finding some support from the domestic animal feed industry. Strong UCO demand from animal feed producers came as soybean oil prices hit a 5-month high, pushing the industry to find alternatives. Now Lauren will bring you through movements of the export market for UCO.
Thanks, Ryan. Regular grade UCO exports to Europe have remained slow for several months because of weak demand and production margins for its finished product, UCO methyl ester or UCOME. This has driven Chinese UCO exporters to seek alternative trading partners, and we saw the first 2 recorded fixtures for Chinese UCO heading to the US emerging in October, for a total of around 45,000 tonnes that will load in mid-November. Here we can see that the discount of UCO FOB China bulk to the most liquid US UCO assessment, US Gulf Coast delivered, has widened dramatically since the middle of this year to the largest on August record of almost $670 per tonne at the end of October. As US renewable diesel capacity continues to grow, this could become a new arbitrage opportunity for Chinese UCO suppliers. But concerns that the US Environmental Protection Agency might bring in stricter checks on UCO sourcing and difficulty to obtaining the necessary veterinary permit required by the US Department of Agriculture to import UCO to the US have kept trade minimal so far. Despite low European demand from UCOME producers, Chinese UCO exports nevertheless hit a new all-time high in September, likely driven by premium UCO exports for hydrotreated vegetable oil or HVO production. China exported some 198,000 tonnes of UCO in September, with most volumes going to Europe, according to trade data released last month. This is a trend we expect to see continue in October, with most trade activity recorded by Argus during the month for premium UCO FOB China. If you'd like to know more about these market developments and Argus's assessments, feel free to reach out to us.
We've come to the end of this month's Asia's Biofuels Market Wrap. Thank you for tuning in and see you next month.